Hello, good people. Welcome back to Money Conversations with Magical. In my previous video, I spoke about the first asset class, that is the cash and cash equivalent. So today, I want to speak about the fixed income asset class. This is simply the bonds. And when you hear about bonds, think of it as a loan. The moment you invest in bonds, you become a lender. You're lending your money to either the corporates or the government. So certain companies raise money through the bonds to expand their operations or do other projects that they have. For the government, that is what is called the treasury bonds. And the government raises money to do various things. It can raise money for their normal operations or raise money to run major projects like the roads, the airports, and all other major projects that the government gets involved in. So the government bonds are classified into two. There's what we call the normal bonds, or the FXD, or we have the infrastructure bonds. The infrastructure bonds are bonds raised by the government to raise money for infrastructure. The difference between these two categories is that the normal bonds, or the FXDs, attract a tax. Could range between 10 to 15% tax on your returns. On the other side, the infrastructure bond is 100% tax free. So when you get into the government bonds, you just need to understand, are you doing the normal bonds or the infrastructure bonds? So these bonds can be purchased directly in the primary market through the central bank, or you can purchase the bonds through the secondary market, where you go through a broker and the broker is able to buy the bonds on your behalf. So the objective of the bonds is largely capital preservation as well as passive income. The fixed income assets, or the bonds, create a very solid way to make passive income, because you are sure that every periodically you will get an interest. So what happens is that because of their very nature, they are called fixed income assets because they pay a fixed rate of return over a fixed period of time. So, for instance, every January and every July, you are able to get the interest credited into your account. So that gives you a solid passive income periodically, and you're able to plan with that. So just being able to understand the objective of this asset class, you can also take advantage of that. Thank you.